So, last week I made a prediction. I predicted that the dollar yen would trade higher, gold and platinum would trade lower. And if you look at the charts, my predictions came true. But instead of tooting my own horn, right, sharing with you, how much profit I made, what an awesome trader I am, I'm going to say this. I could be wrong. That's right, I could be wrong on all of my predictions, on all of my trades. And this just so happened it went in my favor. So the thing is this, I want you to think about this, right? Is that every time I put on each trade, I always have the notion that I can be wrong. And this is why I have a stop loss in place and I risk a fraction of my account on each trade. Because if I'm so confident of my predictions, if I'm so, full of myself, I would risk the farm, wouldn't I? I would bet everything I have on those trades. But I don't. Because I know I can be wrong. And when you admit the fact that you could potentially be wrong, that's where you start to play defensive. That's when you have proper risk management. This is where you start, trading with responsibility. Knowing the fact that, if you are too aggressive, if you get carried away, you could lose everything. So, yep. In this week's market analysis, I want to walk you through the trades that I put on last week. I'll share with you how I go about managing it, as well as share with you a few other trading setups that I've identified in this week's market. So all this and more in this week's market analysis. I'll see you there. Alrighty, so this is the weekly chart of dollar yen. I believe this should be familiar to you because we've been talking about this for quite a while now. So you can see price clearly being respecting the 20 and 50 period moving average. The red one here is 20, the blue one here is the 50 period moving average. So on the weekly chart, you can see clearly the path of least resistance is towards the upside, right? The trend is up. So what happened last week was that I mentioned on this daily chart, I actually noticed this squeeze over here. Especially the fact that I like is that we have this squeeze just below the resistance area over here. This is the resistance and this is the squeeze pattern that I see. So if you want to call a technical setup, this is what traders would call a cup and handle pattern. We have this cup over here and this is the handle. And if price breaks higher, it's a bullish thing. So for me, I got long when price break above this high over here. I had a buy stop order, stops of 2 ATR somewhere here, and it was triggered last week. So right now, if you look at it, you can see the 20 and 50 period moving average, they are starting to slope higher. So for me, I'll be paying attention to these highs over here because this is the first area where the bears will defend themselves. So if they want to go short, this area is where they'll possibly look to go short. So for traders, depending your approach to trading, if you're a swing trader, you could potentially take everything off over here. If you're a trend follower, perhaps you can trail your stops using the moving average. The 20 period moving average would be a potential area for you to trail your stops. So these are some guidelines for you to take profits off the table, depending on your trading plan, depending on your trading style, on how you want to go about doing it. So next, let's talk about gold, shall we? So gold, we spoke about this as well last week or last couple of weeks. We talked about the fact that over here, this was a previous support, then price break below it and test as previous support turn resistance. Then it traded lower and he had a final push higher, breaking out of resistance. So traders who went long on the break of resistance, who traded the breakout towards the upside, they are in the money. But shortly afterwards, alright, I think 1-2 weeks later, price then break back below the resistance. And for me, the key turning point which I felt that the bears were in control was when price formed this bearish pin bar over here, right? It had a stage, a last rally higher, but just couldn't take it any higher before it closed lower over here. So what happened next was that, we have a few days of consolidation. Price on the bull stage, another rally once more, couldn't close higher and finally closed lower over here. So by now, the path of least resistance is telling me that it's towards the downside. Furthermore, you are in an area of a resistance area with the 200 period moving average over here. So stop loss will go above this swing high over here, and you look to take your profits off this swing low over here. and this swing low over here. Depending on how you want to manage your trade, you could potentially take half off over here and the remaining half over here. Or for trend followers, you will possibly look to ride this entire move lower and trail your stop loss as long as the trend is still towards the downside. So there are many ways you can go about trailing this trade. But for me, I took this trade as a swing trading setup. So I took all my profits off at this low over here. So that's my take on gold. For traders who are still short gold, I would say the nearest target that you could potentially look for is actually at this lows over here, right? I believe, this is a 52-week low, and those who are bullish, those who want to go long, chances are this is an area that they'll look to get long. Okay, and that's my take on gold. So right now, let's talk about platinum, shall we? So platinum, last week we talked about it. We spoke of the fact that over here, platinum price was approaching the 20-period moving average on a weekly chart. Notice how the 20 EMA is acting as a dynamic resistance. Then what happened on the 4-hour chart is that we had this head and shoulders pattern that we see over here. Right, this is a head and shoulders pattern. This is the neckline. This is the left head. This is the, left head. This is the left shoulder. This is the head. And this is the right shoulder. So I mentioned there are two ways you can go about trading this. Either you trade the break of the neckline, or you can wait for a price to retrace higher, forming a flag pattern before taking the short towards the downside. So basically I traded the short towards the downside with a sell stop order over here. Then price, traded lower, pretty steep retracement, but it's still, overall, it's still trading lower. So for me right now, I'm trailing my stops using the 20 EMA. I noticed that the 20 EMA has been acting as dynamic resistance. So if price close above the 20 EMA, close above it, I'll be looking to bail out my trade on platinum. So yep. So now let's talk about euro dollar, shall we? Because it's an interesting pair as well. So euro dollar, look at the weekly chart, you can see that euro dollar is still clearly in a downtrend. Notice that both the 20 and the 50-period moving average, they are all pointing lower. But what's interesting is that it has been in a consolidation for about the last 6 months. Over here, you can see this consolidation. So in this consolidation, for trend followers, this is a market that I would stay out of. I believe, if you have been following me for quite some time, you know that I said that the euro dollar, the pound dollar, they are markets that I would stay out of until price shows me where it wants to go. And I believe I got the answer last Friday when the market break and close below the support area over here. Right, break and close below these lows and these lows over here. Those who had their stop loss below these lows clearly are taken out. So for me right now, I'm not in the euro dollar trade, but what I could potentially see is on the 4-hour chart, price is acting, the 20 EMA is acting as a dynamic resistance. So if price were to trade higher this coming week, right, I'll be looking to short around the 20 EMA, right, in anticipation that we have a follow through back towards the downside on euro dollar. So this is something that I'm watching on euro dollar as well. Last but not least, let me share with you another thing I'm looking at is none other than crude oil. So looking at the weekly chart again, crude oil is still in a downtrend, massive downtrend. We have seen since the high of 115 over here to the lows of about $45. Then recently it had tested the lows once more, forming a bullish engulfing. And right now price seems to be consolidating just under the 20 EMA. So on the daily chart, since I have a bearish bias on the weekly chart, what I'm looking at is a potential opportunity to get short in this market to hop on board the longer term trend. So what I'm potentially seeing right now on this chart is that I notice there is another head and shoulders pattern over here. This is the left shoulder, this is the head, this is the right shoulder that is potentially forming, and this is the neckline. So let me draw it out, the left shoulder, the head, and the right shoulder. So if price were to trade below the neckline, I'll be looking to get short on crude oil. This is one way you can go about doing it. Alternatively, you can wait for price to break below the neckline, then it starts to consolidate higher before it trades lower once more. So in this flag pattern that should it form, right, you can look to trade the breakout of this low in anticipation of lower prices. So there are two ways you can go about trading crude oil. There's no right or wrong way, but ultimately you have to find an approach, a style that suits your personality. I'm just sharing with you what works for me, right? It may or may not work for you, but I'm still just want to, put out some trading ideas in the hopes that you can find something that actually makes sense to you. Okay? So it doesn't matter if all this, seems very foreign to you at first. You don't really understand what am I talking, what is a trend, etc. Because at the end of this video, I'm going to give you a link. It's basically a free trend trading course that I've created. If you want to know more about trend trading, go and download the course. It's absolutely free to you, right? And you can understand, basically what trend trading is all about. Trend trading, trend following. Yep, it's all in that course. So I'll put a link at the end of this video so you can actually access to it. So that's all I have for you in this week's market analysis. If you have any questions, any doubts whatsoever, feel free to leave it in the comment section below. With that, I wish you good luck and good trading. I'll talk to you soon.